Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, November 19th. We got a few items here on the economic calendar, and we'll start off with the housing starts for the month of October. We had 1.266 million in the month of September. Forecast is calling for 1.325 million, and it went up higher, but not quite as high as forecast at 1.314. But although this is a very good number, we are seeing increases in housing starts, and then also, as you'll see down below, building permits. 1.391 for the month of September for building permits. Forecast was supposed to dip slightly down to 1.39 and actually went upwards to 1.461 million. This is actually the highest number we've had in approximately 12 years. Since 2007, we've seen this much in building permits. So that kind of tells you the confidence level is high for home builders. And the good thing about this is primarily these new buildings, these housing starts and building permits are for single families, not for multifamilies. So a lot of these are kind of like the bread and butter, so to speak, for housing, and that's obviously a good sign for those people who want to buy homes that we're getting more and more built and more confidence in being put into the housing market here. So this is kind of why we forecasted a Goldilocks next year, a type of not too hot, not too cold. Things will be just right next year. Even though there's a good possibility of a recession next year, housing looks like it could survive it. So as we've experienced many times over, many recessions we have, like 3 of the last 5 recessions, we actually housing did all right. It was actually above water, so it was so we were okay. So let's kind of jump ahead here to the economic calendar. Stocks are down. It's got taken its cue from two things really. Actually, there were some stocks that came in lower. Home Depot and Kohl's kind of had some disappointing results. Came in, so that kind of bringing stocks down. But more importantly, what's been kind of dictating the markets of late is the whole talk of the U.S.-China trade. There's been doubts kind of that are kind of growing with investors that something might be done, that something substantial may not happen primarily before the December 15th deadline. That's when the new tariffs are supposed to kick in, and that's been one of the stumbling blocks that seems to be in there. President Trump doesn't want to go ahead and roll back any of those tariffs uh, or like any and all tariffs. So that's been kind of one of the things that's kind of holding things back a bit. Let's kind of jump ahead here to the bond market. Bond market's doing all right. We did pull back quite a bit. We were up yesterday around 22 base points, 90 base points. We ended up closing up about 5, I believe it was. So some lenders may have price for the worst, so may have worse in their pricing during the intraday pricing. If they did not, they'll price that in today. Right now, we're only up about 5 basis points, so we're still below, well below that mark where we were at the high yesterday when a lot of the pricing was coming out. So again, we're below that Fibonacci, as we've mentioned. That Fibonacci is going to be pretty tough. Uh, don't know if we'll make it above it or if we will. Stochastic is looking like it could potentially have a trend, uh, you know, uh, crossover here. So something we'll have to kind of watch our eyes here as you see this the black line kind of curving towards the red line, and then yields kind of same thing. Yields are getting up against a very tough floor of resistance. We got like basically a triple or quadruple layer here. Right now it is below the 25-day moving average. We got the 100-day moving average right in the same range here, which we're just slightly below those two, and coming up on this Fibonacci, and then just below that we got the 50-day moving average. So we got a whole lot kind of conjoined right there, and that could give it support. Right now it's just a hair under 1.79 percent, and that's pretty much it. Hey, if you guys, so rates are going to be either the same as what we closed at yesterday or a little bit worse, depending on lenders if they did a reprice for the worst yesterday or not. So if lenders did a reprice for the worst yesterday, price will be the same what we close at. If they did not do a reprice for the worst, they may price that in today, so there might be a little bit worse pricing today for those. So again, if you guys are looking to buy or refinance in California, I'd love to hear from you. You can support me and my business. I'm a senior mortgage planner with Pinnacle Home Loans. We have quite a variety of home loan programs out there for quite pretty much any type of situation. We've helped a lot of people here. The best way to reach me is direct message me or email me. Email, to be quite honest, is the best way to reach me. I respond a little bit quicker via email than I do direct message, but I do respond to both. All right, folks, I hope you guys have a great rest of your day. Thanks so much for watching. I'll catch you guys tomorrow. Bye bye.